Unit number 17. So unit number 17, liquidity risk management. So from here we have type of liquidity risk management in potential आपका this potential liquidity risk drivers are very important one because so many they get asked so many times. Principles again आपका we have 13 principles for sound liquidity risk management. Again, governance of liquidity risk management, आपका management liquidity ratios aspect, one case study or numerical question. Stress testing again, contingency funding plan, which are generally outcome of these principles and all. Again, then we have your liquidity across currencies, MIS, reporting to RBI. Okay, this reporting wala part is again very important one. Okay, so liquidity risk is something when we won't be able to convert our asset into cash, or when we won't be able to meet our liabilities on timely basis. Correct? So basically what we generally want, we can have these four situations, but every bank they generally dream around solvent and liquid. Okay? Solvency means आपका profitability, and liquidity is we have enough cash in our hand so we can pay off our obligations or our liabilities, right? So this is what we want, but sometimes the situation is like liquid but not solvent, still manageable, but solvent but not liquid, or neither, this is a kind of a dangerous situation or dead situation for the institution itself, right? So they generally comes under. Now this part is very important, guys. Very important. Okay? One question you guys can expect based on the multiple statements around this particular one. Okay? So potential liquidity risk drivers. So the internal and external factors in bank that may potentially lead to liquidity risk problems in the bank. Okay? So liquidity, like something, let's say we have internal issues also. Okay? Let's say we have taken deposit from the customer and we created asset for long term period. There is a huge gap, huge maturity gap, and we do, let's say we have planned with some other asset and those assets become non-performing, or there is some sort of delays in all. So these kind of issues, they generally provide some sort of problems also, right? So internal banking factors and external banking factors. So internal, basically, which are in the control of bank itself. Again, so what we have, high off balance sheet exposure. If a bank is creating or providing high off balance sheet exposure, that means they are entering into LCs or other guarantee related things and all. So that can be a cause or reason for this one. The bank rely heavily on short term corporate deposits or wholesale deposits. A negative gap, liability is more than the assets in maturity dates or asset liabilities. The bank rapid expansion exceed the available funds on the liability sides. Concentration of deposit in short terms, that means if that concentration, there is some problem with the concentration of our funding sources, so that can also create our problems. Less allocation in liquid government instruments, fewer implementation of funds in long-term deposit. Any statement with like these are the statements. If you are having any doubt with any statement, please do let me know in the comment section, so I'll try to explain that particular one. This is very important, guys. Okay? So the areas are basically high off balance sheet exposure. I hope this we have discussed yesterday only. Okay? Heavily rely on the short term corporate deposit or wholesale deposit. That means, like, why we use retail, why we give more importance to retail depositor, because we get diversifications with those particular deposit. Okay? Let's say we have some state deposit. Now if they state withdraw, so we are going to make, if you have major dependency on state deposits and all, so you are going to make a loss the day when they'll withdraw their account with your banks. So that kind of things. Okay? This ALM आपका asset or liability mismatch, or if the maturity gap is huge. Rapid concentration, again similar one. Rapid expansion was there. Again, that is something sorry. So let's say we are taking deposit and we are rapidly creating long-term assets and all. Okay? So if something happened with the system, so that is going to make some sort of issues and all. So that is generally comes under this. So these are the internal factors. Now external factors, very sensitive financial market here. So where we do not have any control, right? External and internal economics of slow economic performance. We have decreasing depositors' trust on the banking sectors. Non-economic factors, sudden and massive liquidity withdrawals from the deposits. Then we have unplanned termination of government deposits and all. So these are some areas which are generally categorized under the external banking factors. So this part is very important, guys. So please do remember this one and try to revise this one, right? So key consideration to manage the liquidity risk: availability or basically your sources of funds आपका, ठीक है, extent of volatility of the deposits, ठीक है, how volatile they are, ठीक है, the frequency deposit and withdrawals and all, degree of reliance on volatile sources, how much we have, level of diversification of funds, historical trend, quality of maturing assets, that your sources, basically whatever assets we have created, so their qualities and all, market reputation, impact on impact of off-balance sheet exposure on balance sheet, and contingency plan. So these are some key consideration to manage the liquidity risk, or while you are planning risk mitigation for the liquidity risk also. Okay? So we have two major sources. One is funding, another one is market liquidity. So funding is something, it is around the concentration sources and all. Okay? So let's say the sources of funds, if your bank is like sources are concentrated on few areas, so that means you are in danger. So if they'll change your bank to someone else, so you are going to make a huge losses. Market liquidity is something where we won't be able to convert the assets into aapka cash. The risk that bank will not be able to meet effectively the expected and unexpected current and future cash flows and collateral need without affecting either its daily operation or financial conditions. Market is risk that cannot bank cannot easily offset or eliminate position at a prevailing market rate, or आपका, that this we have discussed, I guess, in our previous session also. So that is the relatable. ठीक है? Now this portion again very important one. ठीक है? So liquidity risk management principles. So BCBS published principle for sound liquidity risk management supervision in September 2008. That means post global financial crisis, and these principles are more important than your operational risk principles. ठीक है? So if you'll ask me the ratings आपका, the importance between these two, आपका operational risk principle or this, I'll go with this one because they are very important one. So we have 13 principle here. So principle 1, bank responsible for sound management of liquidity risk. Okay. A bank should establish a robust liquidity risk management framework that ensure it maintains sufficient liquidity, including high quality liquid assets, to withstand a range of stress events and all. So that is the very first one. Second one, आपका principle 2, what they suggested, a bank should clearly articulate a liquidity risk tolerance that appropriate for its business strategy and its role in the financial system. Principle 3, senior management should develop strategy, policies and practices to manage quality risk in accordance with the risk tolerance, and to ensure that bank maintains sufficient liquidity. Senior management should continuously review information on the bank liquidity developments and report to the board of directors on a regular basis. A bank board of directors should review and approve the strategy, policy, practices related to the management of liquidity at least annually, or means once in a year, and ensure that senior management managing liquidity risk effectively. So these are the areas which are generally part of this one. Okay? Principle 4, a bank should incorporate liquidity cost, benefit and risk. Take a liquidity cost and liquidity cost, benefit and risk in internal pricing, performance and measurement, and new product approvals process for all significant business activities on and off a balance sheet, thereby aligning the risk taking incentives of the individual line with the liquidity risk exposure their activities create for the bank as a whole. Okay? Business activity basis or आपका as a business whole. Principle 5, this get asked so many times. Okay? A bank should have a sound process for identifying, measuring and monitoring and controlling liquidity risk. This process should include a robust framework for comprehensively projecting cash flows, arising from asset liabilities and off balance sheet items over an appropriate set of time horizon. 6 आपका bank should actively monitor and control liquidity risk exposure and funding need within and across legal entities, business line and currencies, taking into account legal, regulatory and operational limitations to the transferability of the liquidity. 7 is step. I just reading these particular one. If I'll found anything which is complex, I'll explain that one. Otherwise, these are the plain rules. आपका ठीक है. A bank should establish a funding strategy that provide effective diversification in source and tenure of the funding. It should maintain an organization presence in its chosen funding markets and the strong relationship with the fund providers to promote effective diversification of funding sources. 8 आपका ठीक है. So 8 you can go through because I want to discuss 11 one. ठीक है. So हाँ 9th आपका okay. A bank should actively manage intraday liquidity position and risk to meet payments and settlement obligations on a timely basis. Both आपका transaction level as well as portfolio level. Bank should actively manage its collateral positions, differentiating between encumbered and unencumbered assets. Okay? So when it comes to the encumbered and unencumbered asset, so these are basically like let's say we have some government securities, and against those government securities, let's say we have some government bonds or sovereign bonds, and if we have taken any loan against those upper treasury bills or all, so they are generally encumbered. Unencumbered is basically we have 90 days treasury bills or 30 days or whatever the time duration आपका 91 days treasury bills. ठीक है. So and we haven't taken any loan or any others debt on that particular security. ठीक है. Or if let's say we have some gold and that gold is we haven't put that particular gold in any sort of collaterals and all. So they are easily or ready to convert into cash. So that is unencumbered. Encumbered is basically we have some short-term security and we have taken some loan against that particular security. So this is the basic difference between these two. Basically for LCR आपका liquidity coverage ratio, we use unencumbered high quality liquid asset. That means those are the assets which are readily available to convert into cash. We have not taken any sort of debt, or they are not pledged with any other institutions and all. Principle 10, a bank should conduct stress testing on a regular basis for a variety of short-term and protected institution specific and market wise stress testing. Stress testing is something, this is a model which generally help us to check the efficacy of the existing system कि जो अभी हमने risk management के लिए whatever system we have developed, so how effective they are. ठीक है. So in case we generally do some sort of testing with different scenarios, if this situation happen, how it is going to support our banks. Okay, so that is like we do some sort of stress testing with the help of different models and all, right? Principle 11 is very important. Again, this get asked so many times. Formal contingency funding plan, CFP. It is your plan B basically for that risk, that clearly set out strategies for addressing liquidity shortfall in emergency situation. Let's say if some sort of stressful situation are there, so how we are going to deal with that particular one. So for that sake, we have one plan that is called CFP. That CFP should be tested on regular basis so we can make sure the efficacy of that particular plan. So our CFP should outline policies to manage a range of stress environments, establish clear line of responsibility in that situation, who will responsible or who will execute, include clear invocation, how you are going to basically run that plan or escalation procedures, and be regularly tested and updated to ensure operationally robust. This is very important, guys. 12 आपका a bank should maintain cuisine of unencumbered high quality liquid asset. Nowadays they are generally known as in the term of LCR, liquidity coverage ratio, to be held as insurance against a range of liquidity stress scenario, including those that involve the losses or impairment of unsecured and typically available secure funding sources. There should be no legal, regulatory or operational impediments to using these assets to obtain funding means unencumbered. Okay, this is the meaning, exact meaning of unencumbered, right? Principle 13 आपका, again this is very important around the disclosure. A bank should publicly disclose information on the regular basis that enable market participants to make an informed judgment about the soundness of its liquidity risk management framework and other liquidity position. So where we have 5 different type of reports aapka, those reports will go through just after this one. So these are the 13 principles which generally get released by the BCBS in September 2008, just after the global financial crisis. That Lehman Brothers banks or the global financial crisis was the majorly they was led by the liquidity problems and all, liquidity and credit risk combinations. So after that we come up with this kind of solutions, and BCBS they generally provided these particular areas. Okay. All right, chalo. So again, this is the part which we have discussed earlier also, same thing, same. So now we'll pass on these one, organizational structure and all. So you can go through these one. ELCO आपका, here we have ELCO. So in that case, it was like Credit Risk Management Committee or आपका Operational Risk Management Committee. Here it is generally known as Asset Liability Management Committee. So liquidity risk management policy, we have liquidity risk tolerance, basically exposures, kind of exposures and all. We have the another one is strategy for managing liquidity, again identification or the entire journey. Measurement, we use stock approach and flow approach. These are two approaches, stock approach and flow approach. Stock approach is basically your आपका ratio driven. So we have so many ratios, and RBI have provided the industry average also. So you have to maintain that industry average, or you have to maintain above than that particular one. So you can protect your bank from any sort of your liquidity risk. This is the ratio analysis. These are the 7 ratios which are generally part of this one, and they get asked so many times. Okay? So आपका like we have volatile liabilities, we have core deposit, we have it is generally known as loan to mandatory. There is one term called for this one. I just missed this one. And similarly for this one. So we'll practice these particular one with the help of statement or ratios. So please do remember these one, or else you can take a screenshot so you can revise anytime. So these are the ratios and their significance, and this is the industry average. So this is the basically with this industry average, what we generally do, we create a benchmark and we have to keep ourselves above that particular one. Okay? So this is a kind of a ratio, like this list will be required while you solve the numericals and all, and you have to go through these particular one. So many times they generally ask these particular things in statement ways or the ratios or the uses of that particular ratio as well. Reporting to RBI. So we have these 5 type of reporting for domestic currency, Indian operation overnight basis, fortnight basis, foreign currency Indian operation fortnight basis, आपका combined Indian operation fortnight basis, overseas operation आपका monthly basis, consolidated bank operation your आपका quarterly basis. ठीक है, it should be mentioned here. While statement 1 to 3 आपका 1 to 3 are required to submit fortnightly, statement 5, 4 and 5 are to be submitted on monthly and quarterly basis. So this is the one. So reporting of requirements. So bank are required to submit liquidity returns as per the prescribed format of Chief General Manager in charge, Department of Banking Supervision, RBI, Mumbai. So statement of structural liquidity, and the basic requirement is this. These reports should be in 5 parts, and the reporting timing is something like this. Again, static portion, but very this portion get asked so many times. तो ये थोड़ा सा आपको ध्यान रखना पड़ेगा, ठीक है? The name of the liquidity returns आपका, and their time duration and time period by which required to be reported. So we have again these 5 statements. Part 1, statement of structural liquidity, domestic currency, Indian operations. Fortnight basis. This is fortnight basis. Part 2, this is the format आपका. Part 2 which include foreign currency, Indian operations, fortnight basis. Then we have combined Indian operation, fortnight basis. Part B, your liquidity structures, overseas operation, monthly basis, ठीक है. And part C आपका statement of consolidated bank operation, quarterly basis. This information we have discussed with this also, ठीक है. So this is the same one, ठीक है. These are the same one, ठीक है. And this is the flow. Part 1, part A1, part A2, 3, these are the fortnight basis. This is monthly and this is आपका quarterly basis. Now this is the basically periodicity, आपका periodicity. Now time periods by which required to reported RBI, ठीक है. So let's say for this fortnight, let's say first fortnight of your June months, so we have to submit within a week from the reporting date. Let's say 15th is the first end of the 14 is the first fortnight is getting in. So after 14, we have within 1 week we have to submit these 3 reports with RBI. Now in this case, this report gets submitted monthly. So next month, आपका let's say for June months, आपका by 15 July you have to submit this one. And quarterly आपका a month आपका let's say April, May, June. So this is the final month of the first quarter. So after that, within 1 month, we have to submit these particular one. Here it is clearly mentioned reporting date will be 15th and last date of the month. In case date these date are holidays, the reporting day will be previous working day. Okay, previous working day. Reporting date will be last working day of the months or quarter in that particular case. These two take aapka for this is for these are the for this one. 15th and 30th in case of these 15th and 30th or the last first and 15th and last day, and for this one आपका last working day, and if it is holiday so a prior day, a previous day, whatever the date is given, right? So that is generally part of this one. So liquidity risk arise from bank inability to meet maturing obligation without adversely affecting its financial position. Okay? So liquidity risk arise from a bank inability to meet a maturing obligation without adversely affecting the financial position can be the mismatch between maturing asset and maturing liabilities are fundamental and unavoidable part of the banking most of the cases. Okay? And then the next one is आपका liquidity risk is considered a long-term concern for bank and is often referred to. It is not the strategic risk. Basically, it is called ICU risk. It is generally defined as ICU risk. It is called ICU risk. Okay? So 1 and 2. That means A should be right answer for this one. Correct? So statement third one is wrong. Liquidity risk is characterized by a short-term risk and even called as ICU risk for bank, not a strategic or long-term risk for this particular one. Okay? Next one, guys. Which of the following statement correctly identify potential liquidity risk drivers in bank? Potential liquidity risk drivers in bank. Okay? We have discussed this particular one in detail. पूरा एक चार्ट आपका internal or external factors. So this is based on that particular one only, and this is very very important. So many times you'll see similar set of question in your examination. चलो बताओ क्या होगा answer? High off balance sheet exposure and reliance on short term wholesale deposit increase liquidity risk. Rapid, which is basically internal factor, again, internal causes for the liquidity risk. Rapid asset expansion by bank that exceed available funds on the liability side can cause liquidity risk. Again, internal causes or internal driver to affect the liquidity risk. Depositor trust and economic performance do not influence liquidity risk in bank. So it does, and it is an external factor. It is generally categorized under the external factor. So this is wrong. Concentration of deposit internal in short term and fewer long term deposit placement can arise liquidity risk. External economic shock and sudden withdrawals from depositors are external factors. आपका true. ठीक है. So only statement is wrong. That is 3. That means 1, 2, 4, 5. ठीक है. 1, 2, 4, 5 means option A will be right answer for this particular. Please do remember internal drivers or external drivers. So many times you'll see one question around that particular one, or else आपका पोटेंशियल लिक्विडिटी रिस्क ड्राइवर्स आपका इस नाम से ये क्वेश्चन जो आपको बहुत बार एग्जामिनेशन में देखने के लिए मिलेगा. ठीक है. नेक्स्ट वन. Next question, guys. Identify the accurate statement relating to the governance and operational management of liquidity risk. ठीक है? Governance and operational management of liquidity risk. Simple question आपका with the simple statements. I hope everybody will be able to answer this. चलो बताओ क्या होगा correct answer, guys? The board of director must articulate liquidity risk tolerance aligned with the bank business strategy and role. The senior management is responsible for developing liquidity risk policies and must report to liquidity development to the board regularly. A bank should have funding strategy that rely on a single source of funding to maintain simplicity and control. No, the bank should have diversification. ठीक है? They should have diversification in their sources. Regular stress testing for various short-term and prolonged stress scenario is essential to adjust liquidity risk strategies and contingency plan. Contingency funding plan must include clear line of responsibility, invocation, procedures and regular tested आपका true 1 2 4 5 1 2 4 5 again option A will be right answer for this particular one. The only statement incorrect was very easy one. Diversification is must in case of our sources of funds as well as आपका allocation of funds. Allocation of funds means your आपका assets. ठीक है? Sources of funds are your liabilities. Now next question, guys. Please quickly go through this question. Very important one. ठीक है? So even this is the part which you have to revise. Please बहुत अच्छे से इनको देखिएगा. This is definitely going to help you in your upcoming examination. So there were 7 ratios. ठीक है? 7 ratios मैंने आपको पढ़ाए थे and we do have all the ratios part of this particular question. So then based on these ratios, which of the following statement are correct? So Bank Z is reviewing its liquidity risk management ratio as per RBI guidelines and its own internal limits. The following data is available for Bank Z. All figures are in percentage of total asset. Volatile liability 55%, temporary asset 35%, core deposit 45%, loan plus mandatory SLR and mandatory CRR, fixed asset आपका 85%, earning assets आपका 90%. So along with this, the industry average is also given for these particular one if you study those particular one. So now the question is आपका volatile liabilities is आपका volatile liabilities minus temporary assets divided by earning asset plus temporary assets. This is for this volatile liability. So these are the temporary asset. So temporary assets of this particular 35%, core deposit 45% and all. So core deposit ratio is core deposit divided by total asset and loan. Then next one is loan plus mandatory CRR SLR is 85% and this ratio one means आपका this. So ratio 1 indicate moderate liquidity risk since it is below the RBI average of 40%. ठीक है? I hope you guys remember this particular one. याद है? So it is true आपका. If the industry average is 40%, for the sake now you have to go through that particular chart. ठीक है? So first statement is correct. Core deposit ratio is below the RBI industry average. Core deposit ratio for this one is how much? आपका core depository ratio is 45%. ठीक है? What is core depository ratio आपका? It is average is how much? 50%. ठीक है? Core deposit ratio average is 50%. ठीक है? So it should be आपका industry average is 50%. That means and here it is आपका how much? कितना है इसमें आपका core deposit ratio? Core deposit ratio is how much? The core deposit ratio below industry average. Core deposit ratio is 45%. Yeah. So their core deposit ratio is 45%. It is below the industry average, indicated lower stability of the deposit base too. The liquidity embedded in the balance sheet as per ratio 3 is higher than RBI average. So liquidity embedded in balance sheet आपका ठीक है. So if it comes to this particular one, what is the आपका average? Average is आपका 85%. ठीक है? 85% ना. Please do correct me if I'm right. It is 80 or 85%. It is 80 or 85%. So here it is how much? आपका the liquidity embedded in balance sheet, which is आपका loan plus mandatory SLR plus mandatory CRR and fixed assets आपका higher than that. That means it is 80%. Average for this particular one is, I guess, 80% or what. Please do cross check this one again. And if it is 80% or so, it is again 85%. So this also should be right, but we'll cross check this particular statement again. Next statement, guys. आपका next statement. Please quickly go through this particular one again. Anyone who remember that particular one? How much it is? Sir, module D ब्रह्मास्त्र वीडियो कब तक आएगा? कौन है ये? अनिरुद्ध सेन. Aniruddha, I hope you are comfortable in Hindi. So if you are comfortable in Hindi, it is already there आपका. हाँ, ये already है आपका वहाँ पे, ठीक है? So ये आपका already है. So the extent to which illiquid assets are financed by core deposit, ratio 4, loan plus mandatory and this, okay, is lower than RBI average, indicating better liquidity profile. Their average is how much? कितना इन लोगों का आपका, ठीक है? Earning assets and fixed, okay, temporary asset. The extent to which illiquid assets are financed by core deposit, ratio 4, loan plus mandatory SLR CRR and this, and it is how much? Mandatory SLR CRR. Earning asset आपका 90% and it is how much? आपका 150% or what? कितना होता है आपका ये? Anyone who remember this particular one? 150% ना? This is the industry average for this particular one is 150%. If it is 150%, the extent to which illiquid assets are financed by core deposit is lower than RBI average, indicating better risk profile आपका, ठीक है? This also seems correct. 150% lower than anyone who want to comment on this particular statement, guys, ठीक है? क्या होना चाहिए आपका? मतलब this statement is fine, is higher than the RBI average, indicating the higher this. Okay, the extent to which liquidity asset are financed by core deposit is lower than RBI. अच्छा, okay, this statement indicating आपका liquidity profile ना, this statement आपका wrong क्यों होगा, ठीक है? Why it is doubtful? I have checked the option itself, ठीक है? Because options में ये नहीं बैठ रहा है, तो it should be आपका worsening, ठीक है? This is आपका indicating worsening of liquidity profile. Temporary asset cover less than one time volatile liabilities. Temporary asset आपका which with volatile liabilities आपका, that was volatile liabilities 55% and temporary asset was how much? Temporary asset is कितना है हमारा इस केस में? 35%. हाँ, बिल्कुल करेक्ट है, ठीक है? So temporary asset cover less than one time volatile liabilities, indicating potential liquidity concern because it is less than 1% आपका, ठीक है? So that is correct. The temporary asset divided by total asset. Temporary asset is how much? जो भी आपका रेशियो है उसके हिसाब से देख सकते हैं. Volatile liability fund more than 60% of total asset, exceeding RBI comfort level. Volatile liabilities fund more than 60%. In this particular case, guys, how much we have this one? कितना होना चाहिए आपका इसका? Yes, अच्छा, anyone who reads to this particular one, ठीक है? Anyone? This sixth statement. Okay, we have to check this particular one. I'm not getting the exact answer because the sixth statement आपका, if it is, and I think it is right, but there is no option for that one. So I'll check this particular one. So C आपका correct answer है पहली बार, ठीक है? And very complicated and one case study you can expect based on this particular same data. Just go through that particular one, ठीक है? And that case study will definitely follow 3 to 4 questions. तो पहला आपका ratio 1, ठीक है? Which is C means आपका, C means पहले तो ये देख लेते हैं, ठीक है? C is आपका 1 2 3 5. I was around that particular one only. कहाँ पे गड़बड़ किया फिर हमने? कहाँ पे गड़बड़ किया? 1 2 3 5 1 2 3. अच्छा, 4 and 6 are wrong, ठीक है? That means this is wrong आपका. Okay, we'll cross check this one, ठीक है? So calculate ratio आपका, this is the ratio and that is moderate risk less than 40%. Ratio यहाँ पे क्या लिखा है? From statement 1 2 3 5 are true, statement 4 is false and statement 6 is आपका less than 60, ठीक है? So statement 6 is आपका 35 this 0.60, so it is more than 50. Okay, so it should be less than 50 60 आपका, ठीक है? Less than 60 with comfort level आपका. That is the arguments for this particular. So please go through this particular statement once again. Very important one, guys, ठीक है? एक chart है, there is there are 7 ratios, liquidity ratios, which are provided by RBI with along with their industry average. That you have to remember. Okay? If you will be able to remember the industry average, na, then only you will be able to solve these kind of cases. And they are very confusing. So what I'll recommend कि आपका जब भी आप एग्जाम देने के लिए जाते हैं उससे जस्ट पहले आपका थोड़ा सा उसको आपका रिवाइज कीजिएगा, ठीक है. तो ये बहुत इंपॉर्टेंट है. आई ऑल्सो गेट कंफ्यूज अराउंड दिस पर्टिकुलर वन, स्टेटमेंट 6 आपका, ठीक है. दिस लेस देन 1 आपका होना चाहिए था, बट नॉट दिस पर्टिकुलर पॉसिबल लिक्विडिटी प्रॉब्लम्स. So that chart is definitely going to help you in that case. चलो, और कोई डाउट है आप लोगों का which I can explain, please let me know. हाँ, अनिरुद्ध सर, if you are comfortable in हिंदी ना, please go through that module D. I have done one compilation in detail आपका, ठीक है. So that and D I'll try, otherwise I'll share the PDF itself, ठीक है. Because now it is we have very less time. I'm trying to record that particular one, but I have to prepare this particular content and all, that is taking more time. So if you are comfortable in Hindi now, please go through that particular one, that will help you. Chalo guys, next question. The previous question was based on the case study, and for sure you guys are like, when we'll do the case study, only one session for the case study ना, I'll include similar type of question also, and I'll show you that chart also. तो वो chart से थोड़ा सा आप चीज़ों को लाइक यू कैन जस्ट रिवाइज, ठीक है. एग्जाम में जाने से पहले थोड़ा सा अगर आप रिवाइज कर लेंगे तो दैट विल बी हेल्पफुल आपका. चलो बताओ. सो द नेक्स्ट क्वेश्चन, आरबीआई लिक्विडिटी रिपोर्टिंग एंड इंटरनल कंट्रोल. दिस आई गेस एवरीबडी विल बी एबल टू आंसर दिस क्वेश्चन, ठीक है. यहाँ पे ज़्यादा टेंशन नहीं होना चाहिए. So what will be your correct answer? The statement of structural liquidity is required to be submitted in 5 parts, including domestic currency, Indian operation, consolidated bank operation. True. The statement related to domestic and foreign currency, Indian operation must be submitted monthly to RBI. Here it is mentioned monthly to RBI. It should be आपका कितना fortnight basis, ठीक है. It should be आपका on the fortnight basis, ठीक है. This is wrong. Statement 2. The reporting date for fortnightly tenure are 15 days and last date of the month, if these days holidays submit should be a previous working day. True, 100%. Independent review of a bank liquidity risk management process should be conducted regularly to ensure compliance with regulatory instruction and bank policies. The statement of structural liquidity for overseas operation is submitted quarterly. आपका क्या कह रहा है? Structural liquidity for overseas operation is submitted quarterly within a month from the reporting. First of all, it should be आपका monthly, ठीक है. It should be आपका monthly ना. It should be आपका monthly, ठीक है. It should be monthly आपका monthly and then 1 month आपका. The second statement will be right आपका in this particular case, ठीक है. So monthly and then 1 month to report that particular one. So this is also wrong. So 134 means आपका option B should be right answer for this one. Why you guys are not answering this? We have discussed so many time. ये हमने बहुत बार बात किया था. Like we have आपका डोमेस्टिक ऑपरेशन इंडियन करेंसी, आपको डोमेस्टिक ऑपरेशन फॉरेन करेंसी, कंसोलिडेटेड, ठीक है. सो दीज 3 आर आपका फोर्टनाइट. देन वी हैव फॉरेन करेंसी, दिस आपका मंथली, एंड ओवरऑल कंसोलिडेटेड आपका क्वार्टरली, ठीक है. द रिपोर्टिंग फ्रेम फॉर फोर्टनाइट इट इज 15 days आपका, ठीक है. आफ्टर लेट्स से फॉर जून मंथ 1st to 15 जून विद इन 15 days, एंड फॉर द मंथली वन विद इन 1 month, एंड फॉर द क्वार्टरली वन अगेन विद इन आपका 1 month, ठीक है. दिस वी हैव डिस्कस अर्लियर ऑल्सो गाइज. सो statement 2 is incorrect. Domestic and foreign currency Indian operation statement are submitted fortnightly, not monthly, and this is आपका monthly not quarterly आपका, ठीक है. This is the one, ठीक है. There was one chart आपका, that chart is very very important for all of you guys. Please do revise that particular one, ठीक है. Next one,